All right, guys, it's month number 3 in 2023. So here are 3 more stocks that you definitely want to pay attention to. We are not shareholders of any of the stocks mentioned on the slides. And of course, what we say should not be taken as financial advice. We are doing this purely for educational purposes. According to experts, in 2023, there's a 60 to 90% chance of recession. And I'm sure you want to avoid that. Now, over the past 7 months, our FIRL Pro model portfolio has grown by 18%, while the market has fallen by 3%. Now, if you're interested in learning how we did it, we've got a special free training just for you on the 23rd of March. So go ahead and sign up in the comment section or the description. All right, guys, as usual, it is not buy or sell. When we say that you shouldn't miss these stocks, we don't mean that you should buy it or not buy it. What we mean is that this is something that
just watch out for.
Yeah, watch out for, right? Could be an opportunity. Who knows? As usual, we want to look at how they've been executing. That is key, right? Management can say what they want to say in the public and how good their companies are. But at the end of the day, some results need to be shown. At least some evidence needs to be shown.
They need to walk the talk.
Yes, exactly. Or at least, if they do badly, there needs to be a good reason. So the 3 companies today is SMRT. No, it has nothing to do with trains. We have Dinex and we have EG Industries. So the first one will be SMRT. So SMRT is a stock that is in education and in tech as well, right? Recently there was a big announcement, and by recent I mean November.
February actually. February.
Okay, February. Yeah. So February there was an announcement on them disposing, right, at a particular subsidiary, which is in the education space, which is loss making. And so whenever such news comes in, and when education is a big portion of their revenue in the past, this is always seen as positive news, and that's why it's no surprise over the past month it's up 181%. But what is interesting is that it is already 240 million market cap. So that's the interesting bit, because it would have been a lot smaller right in the past. And if you look at late February to this recording, it's up nearly 80%. But yes,
exactly. Okay. So you notice that I actually put the difference in price over here. I put it around 30 cents until the peak, right? The reason why I put at 0.3 is because that's the price point that I bought. But just for a disclaimer, I no longer own the share. The reason why I buy is just purely for gambling only. Yeah, don't gamble, guys. But then, you never know whether it goes up or it goes down. So yeah, this is just one of my fun time to play with the stock. But anyway, so let's look at SMRT's latest report. If you look at their Q3, so far it has been doing pretty decent. It's almost on par with Q1. It's actually the same as Q1 2022 and the previous preceding quarters, about 3 million. And then overall, they are making in a profit right now, which is pretty good as compared to like 3 years ago or 2 years ago. They were making losses. So that is a pretty good sign that their education space and also their tech space also is doing pretty well. Now, if you look at the top to bottom line, you notice that their top line is actually still growing, about 20%, double digits, pretty good quarter on year-on-year, comparing between the last quarter and to this quarter. And if you notice their bottom line, the profit side is actually up 3 digits.
Big amount.
Yeah, big amount as compared to the increase to revenue. So yeah, that's actually very, very impressive. Okay, so this is the segment breakdown, as MJ just now pointed out that they got education segment. So they did propose that they're going to dispose all of these education segment for a cash sum of, I believe it's around 40 million. Yeah, if I can remember correctly. Yeah, but do correct me if I'm wrong on the comments. And then they want to buy, basically just buy the entire stake of this company. Starts with N. It's a very complicated name. NORECs or something like that. Yeah. But basically they're actually holding around 60 to 70% stake, but they want to buy the remaining stake so that they can control 100% in the tech company. And if you notice the difference between the top line, right, it's actually not that big as compared to education. So it's like about 50% difference. Yeah. So if let's say they dispose of the education segment, right, you definitely gonna anticipate a 50% cut in revenue. But the bottom line, the profit will be improving quite a lot. Because if you look at the bottom line, right, it's about 90 million compared to the education, which is 4 million. So revenue cut by 50%, profit will be better, much more better. I'm just going to say that. Okay, so in terms of their balance sheet, they are currently in a net debt position. So the reason why they are net debt is because of the education segment.
Yes.
Yeah, they got a lot of the properties also for their educations facilities and all those. But if let's say they dispose of this education segment, I believe they will be in a net cash position because the tech business, they do not really require a lot of properties. They actually only need like 1 or 2 offices. Then they just need their manpower to operate in the office. That's it. Yeah, it's a service-based type business. All right. So cash flow wise, not so good right now. But reason why it's not so good is because their revenue is increasing.
Yes.
So that's a good sign. And when revenue increase, also you kind of be anticipating their receivables to increase as well. So right now they're incurring a negative operating cash flow. But after, again, just want to point this out, after this dispose of the education segment, expect operating cash flow to be positive. Now, the final takeaway here is that they are selling off the education segment. This was reported back in 1 month ago, the early February 2023, and they decided to go full force on their tech business. And just like I mentioned, more than 50% of their revenue will be gone if, let's say, this proposal go through, but their profit margin will increase tremendously. And the profit is actually growing at double digits if you actually look at their SSM data for this particular tech business. So it's actually very, very impressive. And just a final note for you guys, the management actually bought the tech business for just 4 times PE.
It's crazy.
Yeah. A low valuation, but the profit is growing like double digits. So I believe that they really got a good bargain out of this tech business. So yeah, that's it for SMRT.
Yeah, the only thing I'll add is that SMRT, they're poised to make 20 over million a year, right? As a result.
Yes.
And currently they are trading at 240 million. So it's about 12 times earnings, which got crazy because just a few weeks ago, it was like 6?
Yeah, right? 6 times. Yeah.
Or something like that. So, 12 times earnings for a tech company, you could say immediately that's low because, typically tech is 20, 25, something like that. Mm-hmm. But it's also worth noting that we need to look at the specific kind of tech business they're in. Right? If it doesn't have huge growth runway, then for sure 12 times might be the fair price or even a bit overvalued. Right. Really depends. Yep. But yes, so we will move on to the second company,
which is DNEX.
Now, guys, if you're really interested in building a 6 to 7 figure portfolio, we've got the perfect solution for you. Head over in the comment section or the description to sign up for our free masterclass where you can get all these proven steps to achieve it. DNEX, I think we've covered this for more than 2 years already. Yeah. It is a very interesting company. So the last round, there was a big drop in November, December, that time frame, because they had this big issue with their China partners, legal issue. You can watch the video right here.
Yep.
We'll link it there on a little bit update. Now, of course, it fell as low as, low 50 cents. And then there was a bounce back up nearly to about 70 cents of that.
Yes.
And then since then, it's been pretty much trailing and not doing much.
Yeah, so they also recently just announced their quarterly reports. I believe it was a little bit of a drop if you compare between the preceding quarters. But it's still in a profitable stage. If you look at cumulatively, they are actually not really performing as well as they did last year. for financial year 2022. So yeah, that's actually a sign that their tech business is kind of like slowing down. Or it could be that their other business segment also is slowing down. So if you look at their top to bottom line, there's the thing that you maybe intrigue you is this bottom line over here. It's actually down 70% and 40%. Revenue cumulatively is up 20%, but for individual quarter, it's down 6%. So yeah, the cost is actually eating up more than what they generate in the business. Okay, so this is the segment breakdown. So as you can see, I know this is going to be a little bit confusing because of the layout, how they put. So in here, this is their technology business. So far, you can see that, actually their tech business is doing okay. I mean, it's growing a little bit lah, from 371 million to 440 million. And then their IT also is kind of okay. Yeah, and the energy also is kind of okay. So this is cumulatively. Cumulatively, their revenue all is looking good. But if you look at the bottom line, that is where it gets interesting, because you look at this bottom line for their IT, 40 million is cut 50%. And then their tech, 130 is also roughly cut about 40 to 40%, 30 to 40%. Yeah, but the only business that is bringing in profit to them is their oil and gas business, the energy.
Yes.
Yeah. So that one is doing well. I mean, as you can see, some of the oil and gas company has been doing very well for the past few months, but recently it has started to drop also. I mean, if you notice, the crude oil prices is like right now, I believe it's around $70 per barrel.
Yes, yeah. It's been dumb in recent times.
Yeah, okay. So nothing too much to comment on their balance sheet. They have been a very healthy cash flow, very healthy position because of the pile of cash they have in their bank. So I'm not going to really comment much on that. Cash flow wise, they're still positive, but there's a huge drop because of the tech business didn't really bring in much meaningful profits.
There's a lot of spending, right? Because there's no expansion stuff, right? So it is a very capex intensive.
Silterra is a very capex intensive business.
And also they are not producing the high end kind of chips, right? So you would expect them to not be as profitable, but I could be wrong. But I think that's how it is.
Right. Okay. So here are the few takeaways over here. The court case is still ongoing. It's not resolved yet. Right. Although it still looks like it's gonna resolve soon, because the market didn't really trade much on this kind of news. I mean, it's already dumb already lah, more than 50%. So right now it's just like tapering of consolidating phase. So that is still there, but it's still an issue that you want to pay attention to. And then the reason why they reported lower profits for their tech business, right, is because they mentioned that they have a one-off negative goodwill of 264 million. So maybe the next quarter, probably the profits will be improving. And also they got an impairment loss of 11.45 million. And then this is basically the prospect that they mentioned for their tech business. Basically, they say they are anticipating a wafer shipment volume to normalize in the near term. I mean, this is kind of expected already. A lot of tech business are kind of very cautiously spending on their capex. They are not really over ordering more new orders. So it's kind of like a very normalized phase that they are going through. And the last one is actually just recently only, and I just added this point, is that Tan Sri Datuk Zainal just recently resigned as CEO.
Yes.
Yeah, so I believe MJ went to the Zoom meeting with him.
I think my impression of him was he was quite okay, but it's a bit of a worry, when there's so much going on and now you step down. Of course, the language that was being used in the article was that, the usual personal interest, and he still wants to, if I'm not mistaken, I need to check on this, but if I'm not mistaken, he still wants to be somewhat involved in the oil and gas side. For me, it's a little bit of worry. I would investigate here, why is it at when the company is going through the big changes, a lot of investors, people who are bullish on the company, they feel like this is an inflection point. This is an inflection point where they spend all the money, and now because of the trade war and stuff like that, people are trying to diversify their chip making capabilities, and you have D-Nex being one to take advantage of this. And yet, in this moment where it's crunch, you can say crunch time, there's a departure. Not quite sure why, but a lot of these things are internal, so we can only, as of now, guess. But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description. Okay, so third is EG Industries. So this is a company we never covered before.
Yes.
I've looked at it since, I want to say 2018, 2019, that period. Obviously, I didn't think much of it. Clearly a mistake. 170% up. But yeah, what do they do, and like why is the stock going up?
Right. So I believe also it's something related to the tech business for EG.
Yes.
Yeah, but we get into the segment breakdown later. Let's have a look at the overview first, because if you notice that their past 2 quarters has been reporting profits, about 9 million. If you compare between all of the previous quarters, right, it has been like underperforming, sometimes even losses. So I'm not sure, maybe it's because they got a better customer, or the management is like getting more and more business from someone else.
Right.
Yeah. So yeah, overall their profits is actually doing
about 20 million.
Well. Yes, exactly.
So 20 million on $500 million.
Yes. And this is only just 2 quarters only. So there's another 2 more quarters that they haven't reported yet. Yeah.
Ooh, okay.
Yeah. So that will be quite interesting to see what are they going to do. Right, so this is the top to bottom line. You can see that their revenue is increasing by 35%. Profit also almost doubled, about 84%. And yeah, nothing much to comment on. Business is doing very good. However, they are in a net debt position. So they actually have a lot of debt in the short-term debts segment. So that is pretty concerning, because the reason why they have short-term debt means they have to pay it off within 12 months.
Yes.
Yeah. And yeah, if they don't have the capability to pay off from their business segment or cash flow, they may have to raise money from the public to actually pay off these debts. Yeah. So that's something you need to take note. Cash flow wise, it has been quite bad also.
Right.
Yeah. So if you look at profit, is doing well, but cash flow is not doing well. So that means they are not really collecting cash in their banks. So yeah, that is something you need to take note. And it's if you compare between the last quarter and this quarter, it's also about the same. There's no improvement. The only improvement is that it's getting lesser and lesser, the negative cash flow. So yeah, and also one thing to note is that they are actually expanding their business a little bit. They are spending about 26 million as compared to 8 million. So yeah, that is a sign that the business maybe is doing quite well.
Yeah, I remember they are in quite the lower end of EMS, if I'm not mistaken. So,
I think it's something to do with PCBA.
Yeah, that's right. Yeah. So
the printed circuit board, if for those that don't know what's that.
Yeah. So I think this the first worry, somewhat of a worry, it's like this proposal for private placement.
Yes. So I mean, right now I'm not sure how much is the share price went up again. Okay, so it's like 1 ringgit and 24 cents, but their private placement that they're gonna place is about 54 cents.
Okay.
So it's like half already of it, but it's only like 10% of the outstanding shares. And also, just to tell you, the group CEO actually just resigned. Yeah, CFO just resigned, and he actually joined in 2014. So I don't know why he suddenly resigned. Maybe he pursued other interests. But yeah, I'm not sure what sign is this. But another thing to take note is that they are trading at 20 times PE right now. So which means whether is this company overvalued as an lower tier player in the tech value chain? Whether is it cheap or expensive, that is up to you. For us, it's not so attractive. Yeah. So yeah, that's it for EG. Any comments on EG?
No, as usual, look into the business, something I've not looked into quite a while. Perhaps we can give an update in the future.
Yes, right.
All right, guys.
And before you guys go, just a quick update on FIRL Pro stock portfolio. So this is the February 2023's performance. You can see that everything's on the green. Sadly, we kind of like hinted in the last few videos that one of the stocks is going to hit 2 times 100%, but I kind of jinxed it. So right now there's no 100%, unfortunately. And also we got one stock is in the loss making, is about 7% drop. But if you notice the second portfolio we have here, it is the Telegram stock portfolio. Basically, these are stock ideas that we share in the Telegram group. That is not inside FIRL Pro. The reason why it's not inside FIRL Pro is that there is some sort of like a short-term catalyst for this particular stock.
Yes.
So
You can write a report.
Yeah, you can write a report. So
quickly.
it must be on that day itself. We have to tell them just to like capitalize on this kind of opportunity. And this is the performance so far. I believe those who actually are in part of the Telegram group, you guys know what stock already, and some of you guys maybe even I don't know whether you guys
maybe
got
if you watch
attention.
this video, you also know what stock A is, right?
Yeah, maybe lah, maybe. If you think hard enough, then probably you know lah.
Okay.
Right. Okay. If you're not convinced about FIRL Pro, you can check out our free version. We have basically a free sample that we actually wrote a report on PMB tag. So that is a sample for you to actually have a look at how we actually write reports for FIRL Pro. And also we also provide you a video of SIB program. I believe it's about modes. So if you want to check out all of those free stuff, the link is at the description and comments down below. So MJ.
Yeah, looking forward to seeing you guys in FIRL Pro if you're interested. If you have specific questions, feel free to email us, Instagram, DM us, and we'll share with you all the other details. There's actually a lot of other stuff that we didn't quite mention here beyond just the fact that we write reports. So yeah, hopefully that, whatever that's inside here can help you with some of your financial goals as well. And guys, thanks for watching all the way. Come watch some of our other stuff as well. If you like our content, go binge on them. And yeah, looking forward to seeing you in the next video.